Hello there, Mavericks. This is Rob Reinhold. This is the Trading Room, and we are going into monthly options expiration into August, so let's get into it. In this session, we're going to be covering what happened last week, and boy, was that quite a week. I got a lot to talk about. We're going to rescore everything from top to bottom, +3 to -3, and that's going to give us where to go hunt for our best trades.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, quite a week, and we've got to just start with the beginning. Sunday night was an absolute total disaster as far as nights go. We saw the Nikkei plunge 13%. And now we've been having a big risk-off trade in the Japanese yen. Everyone had borrowed the yen to go buy other currencies, and all of a sudden the Bank of Japan started raising interest rates, and it caused there to be a real collapse around the world, as I'm sure a bunch of big funds had to be liquidated from the losses they took. The Bank of Japan came out on Sunday night and said no more rate hikes, but Sunday night was absolutely bonkers, and I'm going to pull up the chart here of the VIX. The VIX got all the way up to 66. Now, just to let you know how bad that is crazy. That is a crazy amount. Here is the chart going back to 2000. And take a look at what we had the other spike over. What was it? COVID. And remember how bad things were during COVID? Remember just how bad it was? We were going to shut down as an economy. We reached the same level of panic on Sunday night. Now, what happened was things seized up. And this happened during COVID. And there were a lot of trading instruments like in the futures options markets and also the SPX options market where there was no trading going on. And what I mean by that is that there were some options quotes, the bid said 0, the ask said 1,000 on an SPX option. There was no one trading. If you wanted to buy or sell that option, you couldn't. You didn't even know where the market was. It was insane. Everything froze up. People couldn't hedge, which causes more panic. It was really bad. I stayed up most of the night on Sunday night working with our SPX traders and trying to get them through this period of time. And I told them, look, there is a ISM Services PMI coming out at 10 a.m. If you can get to that point and the number comes out okay, it should calm the market down. And that's what happened. We did hear from Chairman Powell this week, and he said that a rate cut is on the table. Not just a rate cut is on the table, but the markets are pricing in a 50% chance of a 50 basis point cut in September. So the markets are looking for a rate cut, and by Friday, we had calmed down quite a bit. Now, I want to talk about this day because there are times in the market where we reach a point of what's called capitulation. Capitulation is where you get a huge spike in the VIX, everyone panics, you hear it on CNBC when everyone starts yelling at each other and Kramer starts, losing his mind. We reach that point of capitulation. Those are typically bottoms. Now, I am not calling for a bottom here, but what I'm saying is when you get those washouts, it generally holds that level. That doesn't mean it's going to, but generally it holds that level. By no means am I bullish here, but that capitulation move, it actually makes me feel better, especially as we worked our way out of it. And on Friday, we'd actually closed where we're flat, and the NASDAQ was even up for the week, if you can believe it. I mentioned that ISM Services number. It was slightly better than expected, which definitely helped the market out. And then we also got these unemployment claims. People are worried about employment. They came in lower than expected. This also helped the market. I'm going to go back to this dumb little video here because I've been showing this for the last couple weeks. And I talk about the sentiment of the market. And I give the analogy of when you're in a good mood and someone cuts you off in a car, whatever, not a big deal. You're in a bad mood, someone cuts you off in a car, you overreact. At least that's what most people do. The market is the same way with sentiment. And I was saying about 2 weeks ago, we went from a good mood in the market to where bad news came out and everyone said, who cares? To all of a sudden, good news comes out and people say, we don't care about that. It's so bad right now. We have shifted sentiment to the negative. And at this point, typically what happens is rallies are sold off. Good news is discounted. I'm going to go back to this quote. I love this quote from Joe. We were arguing about 25 years ago about a trade, and I said, Joe, I know I'm right. And Joe said, I don't care if I'm right. I just want to make money. So I am not here to give you my opinion, which is, I'm going to give you my opinion, but my opinion, I'm not dug into a ideological view. I am not looking at this as, hey, I want to be right because I think I think the economy is too good and it's going to crash or whatever. Or I'm a perma-optimist. I'm going to be going through this market analysis purely to what the best way is to make money in this market. So let's go through the numbers before we get into that. You can see we had, by the end of the week, closed just fine. Closed just fine. Dow, S&P, Qs were even up. I was disappointed that the Russell was underperforming all week long. We had that big rotation. The fact that the Russell is underperforming, it's a little bit of a warning sign that, hey, we've seen this other times where small caps are lagging. It's kind of a little bit of a warning that, hey, we're only getting big moves from the big mega cap names where the rest of the market is actually lagging behind. So we'll have to keep an eye on that. But let's look purely at charts. So we got this capitulation move. We got this gap down. And the first 2 days, I was like, hey, you know what? I'm not convinced. Look at those long upper shadows. And sure enough, Wednesday was a complete disaster. We had gapped up, we had run up, and then sold off all day long. And I thought, hey, we are not done yet. The markets were able to fight through it. So here we are at the end of the week. We basically closed flat with where we were on Friday. That doesn't make it bullish. As you can see, there's a lot of technical damage done. We're below the 20, we're below the 50. They've now crossed. They're starting to move lower. Look, there is nothing bullish in this chart, and I do not want anyone to think that I'm coming off saying, hey, I think this is a great buying opportunity. I'm definitely not saying that. But what I am saying is these capitulation lows typically hold. I'm looking for a market that trades below the 50-day moving average, but above that capitulation low. That's where I think we go for the next couple weeks. Could we drift up maybe all the way up into the 5,500 range? Okay, sure. Do I think we're going to see all-time highs anytime soon? I don't. I think we're going to be in this range, in this area for the next at least couple weeks, if not even longer. We are coming into September, which remember, September, the 6-week period from September 1st to October 15th, is traditionally the weakest 6 weeks of the year. So I'm not bullish at all. What I am saying, though, is that when you see the VIX spike like that, it typically tells you, okay, that was the washout. That was the low. Here we have the Qs. They bounced back. Same thing. I don't expect to see any new highs, but I do think that low is likely to hold. So we're trading between 425 and 470 on the Qs going forward. Taking a look at the heat map, you can see that it was generally mixed by the end of the week. Nothing to be told here. Some strength and weakness all over the board. This week, the market has shifted to a bearish bias. Expect rallies to fade. Now, I had that last week. I have not changed this because that's where we are. We are below the 50, below the 20, and they're starting to slope lower. This could be wrong, but we need to expect all rallies to fade until we can work our way back up above those key levels and start putting in some bullish price action. Right now, the market is in a bad mood. Bad news is going to be bad news, and good news is going to be discounted. Until we see that change, we just have to assume that's what's going to happen. And of course, we talked about this last week. We want the bond yields to stick around 4%. If you're bullish, if you want these markets to hold up, you want these bond yields to hold right around 4%. That's showing that People aren't panicking, but they're still low and not hurting economic growth. Next week, we got a ton of news, so let's get into it. We got PPI on Tuesday, CPI on Wednesday. Remember, we've switched. Now, if inflation is too low, that's bad. Think about that. I know it's weird. It's weird. Like literally 3 weeks ago, we were the other way. Now, the market wants to see economic growth that's holding in. They don't want to see deflation. If these numbers come out at like 0 or negative 0.1, that's going to be a big warning sign that, oh my gosh, the economy is slowing way more than we expected. Inflation's now deflation. It's going to be very negative. We want these numbers, if you're bullish, to come in at 0.2. 0.2 is the perfect number. If they come in at 0.2, I think the market is going to be very happy with this, and I think the market probably continues its bounce. We also have retail sales. These need to hold on as well. We need to have better numbers, or at least as expected numbers, if we want this market to be bullish. Now, of course, if you want it to be bearish, you want deflationary numbers, or even hotter than expected inflationary numbers would really confuse this market and send it lower. I really think the only thing that can help this market is 0.2s. 0.2s on the inflation numbers. And really, you know what? Just the CPI. The PPI no one cares about. Other than that, you can see we don't have a whole lot more on the calendar. So scoring this market, we are at a -2. That's what it says. We could be going to a -3 if this market has a down move this week. But right now, we're at a -2. I've got this week at a +1. I think this week is going to be a week that we creep higher. There's probably a day or two in there that's going to test the market, where it's going to, gap up and then lose all of its gains and close negative. I could easily see a couple of those days, but I think by the end of the week, we're going to be slightly higher. That doesn't mean I'm bullish. It does not mean I'm bullish whatsoever. It's all in the context of, I think we trade below the 20-day moving average, but above that low we set on Monday. That's my outlook for these markets. Now that's okay, outlook for the markets is great, but the sectors are telling the whole story, and if you just focus on sectors, you've been doing just great. All right, let's take a look at the performance. So last week we had 3 +3 sectors. We had utilities, real estate, and healthcare. All right, now I pointed out that these were defensive sectors. These are the sectors that typically do best in environments where the markets are crashing and also when interest rates are going lower, because these are yield plays. They sold off, but you can see they didn't sell off all that badly. The sectors that we said were the weakest last week were consumer and tech. You can see that tech actually had a bounce back, and we're going to rescore all these sectors, but consumer stayed down. What were the best looking sectors this week? Industrials and financials. They were at 0s and -1s last week. These were clearly the best. Comm services was nice. Energy had a nice week because oil was up on some Mideast tensions. But let's take a look at the aberrations. Materials absolutely clobbered this last week. So obviously, this is where the money is still fleeing. Money is still coming out of materials. Money is still coming out of the consumer sector, where it is now coming back into the industrials and financials. So let's score all these sectors one by one. Utilities was a +3 last week. It's a +3 this week. We had a little pullback. That's it. Nice price action on Thursday and Friday, closing up at the highs. Nothing to see here other than a +3. All right, this is comm services. Look at the crazy volatility here. I mean, -2, +2, -2. Now we're at let's call it a +1. Understand that when you're scoring these sectors, when there's so much volatility, these are changing by the day. And based on what day you took your numbers, it could be wildly different. You can look at these and just kind of smooth them out. Like this one, I'm looking at saying, hey, if I just wanted to give this one a 0 because it's not really going anywhere, yeah, you're totally fine doing that. Understand that if you're really just looking at it every single day, these numbers are going to change quick because we are in high volatility. So for me, comm services came back nicely. And one of the things I really want you to look at when I go through these charts, I want you to identify what sectors closed higher than they closed than last Friday. And you can see there was more buyers overall this week in comm services. And actually, there was a ton of buyers because this was a gap. There were no sellers in between here. This is just a gap. So there was a lot of buyers that came into comm services. Coming over here to our real estate sector, it was a +3. It's a +3. It held in. It held in great. This is the best defensive sector out there right now in real estate. Here is healthcare. We downgraded this from a +3 to a +2. Still looking good. Had 2 nice candles. Recovered nicely. Not quite back to where it was on Friday, but like I said, it's still up above moving averages. This one still maintains a +2. Industrials, it's a 0. It's between the moving averages are flat. But look, it is solidly higher than it closed on Friday. This was the close Friday right there. It is solidly higher at the end of the week. Taking a look at financials, it's a 0 as well. But look, it is much higher than it closed on Friday. This is telling you there was more money coming into these sectors this week. But here we have consumer. Here's where we were Friday. Look at that really lethargic bounce. That's just very lethargic. This stays at a -2. Look, technology had a nice bounce. Great. But it's not substantially higher than it was on Friday. I mean, we looked at that industrial chart. We look at that finance chart. They were well higher than they were on last Friday. Technology it's flat. It's not showing you that it's getting a ton of money into it. -2. Stays there to -2. This is the one big downgrade here. We're going to a -2. And you can see this is horrible price action. Everything else had an upward move. This thing gapped down and stayed down. Could not rally to save its life. Then we come over here to the energy sector. It rallied, but it still remains a -1. But if I'm looking at this, I'm saying, hey, this at least closed higher than Friday. Like if you could give a -1 plus, that's what you should do here. Saying, hey, this one at least closed higher. A lot of buyers came into this sector by the end of the week. This is where we were last week. Healthcare got knocked down from a +3 to a +2. Materials was the big downgrade for the week. And then we had industrials and comm services improve. This is a great trading board because we've got these sectors here that these will do best if the market turns over and goes down. We already have exposure to these. We put these on last week. Well, hopefully you've put them on to where it's going to help. If this market turns down, it's actually going to be good for these. If the market turns down, these are going to be the worst performers. We want to get in negative short things in this. They didn't really bounce back up. They're underperforming the market. That's where we want to be. And then these here in the middle, these were the 4 sectors that are higher now than they were last Friday. If this market continues to bounce, these are going to be the winners most likely. So if you're looking for bulls that aren't defensive sectors, there's no question that comm services is number 1, industrials, financials number 2. That's where you should be focusing your trades. Let's take a look at where we were last week. We had 4 trades roll off. We had a -1 at comm services. Disney was a max gain. It was nicely. We had a -2 in consumer roll off. That was Lee Automotive for a loss, not a max loss, but just as a loss. And then we had 2 sideways ones. Telling you, big volatility does not help sideways trades. They were both max losses by the end of it. Scoring the market, we've already did that. It's a -2. We know that with our -2, these are the slots that we can fill with trades. So right now, these are the trades we're going to be adding on 4 trades this week. We've got +1 or a 0 in comm services. Now look, I would love to put comm services at a +1 or +2. I would love to make a +1, +2 trade. T-Mobile looks fantastic. Looks absolutely great. There's so many good looking trades in that sector. Here's the problem. At a -2, I'm already fully allocated to my bullish ones. So I can't add. The best I could do is a 0. That's the highest slot that I can add following my rules. So I'm going to put my favorite sector, comm services, in at a 0. So we're going to find something that is neutral to slightly bullish that'll help us make money. Down here, we've got some empty slots for bearish trades. So we're going to fill it with consumer and energy to -1, and materials is the weakest sector, in my opinion, at a 1. We can do a -3. We can do 4 -2s, but remember, within this system, you have the ability to decide how bearish you are. I don't want to be bearish. Now, that could be a wrong decision, and that's perfectly fine. I'm perfectly fine if I'm okay being wrong. If I'm wrong, guess what? I'm still going to make a little money. I'm still going to make a little money because these are likely going to be at least hold in or go up. These are likely to do well, and I'll lose on these. The way we're allocated, yes, we have a premise of what we think is going to happen, but what about if that's not right? Are you going to get killed? If that's the case, you're allocated too much to one way. This is how you do it to where if I'm right, I make some money. If I'm wrong, I actually hopefully make a little bit of money or not break even. If you do that every single week, you're going to do just fine in trading. Now let's get into some trades.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
First off, in comm services, like I said, I loved the chart on T-Mobile. T-Mobile looked great, but I don't have a slot available for a bull. Next week, I will have slots available, and maybe we can take a look at it then. But right now, we're looking at Verizon on a sideways. So I want to do a 0. Verizon is definitely looking sideways here. If you can see, we had an earnings report. It knocked it down. It recovered. So the only question is, where do we put our midpoint? So this has 50-cent strikes. So there is a midpoint at 40.50. There's one at 41. There's one at 41.50. There's one at 40. That midpoint is where you think it's going to close on the day of expiration. I want to be slightly bullish. Again, I would love to do a +1, but I can't. So I have to choose between a 41 strike and a 40.50 strike. Well, if I choose the 41 strike, this becomes a slightly bullish butterfly, which I'm very, very happy to make in this sector that I think is likely going to do pretty decent. So if you're doing a shorter term trade, 40, 41, 42, that's the butterfly. You just let it float up a little bit into there. If you want to be a little bit more bullish, so let's say you want it to be closer to a +1, then I think the trade is the 40.50, 41.50, 42.50. So again, it's going to float up into the middle of this range right in here. Then that would be a really nice trade on Verizon. Wish I could get more bullish on that, but I can't. I have no slots left. We were going to do a -1 in consumer. What I wanted to find was I wanted to find stocks that didn't participate in the rally. Now, if I was in the utility sector, the real estate sector, those are defensive sectors. And so that would make sense. But take a look at this Dollar General. It went down when the market was going up, and it went down when the market was going down. It's not correlated to the markets here. It is doing its own thing. It looks really, really bearish here. So the big question is how bearish you want to play it. We're looking to do a -1 trade. So I'm looking at this August 23rd, 120, 116. So this is where we're playing it. If it goes below 116 and breaks this support, it's going to be a max gain trade. If not, it's going to run up, and if it runs all the way up here, we're at a max loss. It's a very simple, easy spread trade. We're not asking it to go very far. We're getting positive theta and we're getting negative vega, meaning if volatility continues to shrink, this is going to help our trade on Dollar General. Next up is materials. We wanted to be a -2 on this one. So looking for something that we think is actually going to be heading lower. There's not a ton of stocks in this sector, so I'm not super happy with this one, but it looks good enough. Classic bear rally. We were already weak. We're having a bear rally pattern here. There should be a ton of resistance up in here. So looking at this candle, I don't think this thing's ready to go right here, right now. I think a day or two more, let this thing come up, let it turn over, give us a red candle. There you go. There's your trigger. I think that is what you want to do here on this BHP. Let this bear rally play out. And for me, I'm looking at this one only has monthly options. So you either have to do this, the August 16th vertical spread, or you can turn this into a diagonal put spread. This one I'm going to be looking at doing the 57.50, 52.50. That's going to be a diagonal put spread. And last, we had energy as our other -1. This here is our favorite at Maverick. This is Schlumberger. Those of you that haven't heard the Schlumberger story, here it comes again. Anytime this stock comes up, I got to tell this story. When I got Joe into trading 23 years ago, Joe didn't know anything about stocks, and he was a perfect student because he didn't have to learn or unlearn bad habits. He had no habits. He didn't even know what stocks did. Like, he had no idea that this stock is not called Schlumberger. That's the actual name of the company. So I was asking him what he was trading. He's like, I'm in this SLB Schlumberger. And we all laughed. We're like, we will never call it Schlumberger again. So it's Schlumberger. Always Schlumberger. All right. Weirdly, I thought it was a French company. It is a US-based company. Here's what I like about this. No bounce. Look at that. No bounce whatsoever. Oil was up 3.7% this week. No bounce. No bounce whatsoever. It's telling us people don't want to buy this one. So this one has weeklies. So I'm looking out to the August 23rd, 45.43. So again, this is at a -1 trade. Not asking it to go down much. In fact, if it just goes sideways, we're going to still make a little bit of money. If it does break below that 43, it's going to be a max gain. Remember, we're not looking, at least I'm not looking to get really bearish here. I'm just going to stay tilted bearish until this market tells me that that's the wrong place to be. If you guys want to share any other trades with the Maverick traders, go onto the website, go to the members area, log into the forum, and let's get some discussion going there. Wrapping this up, expect rallies to fade. Now, I've been saying this for 2 weeks. I think we are in the middle of a really nice rally here off of what I believe is a capitulation low. When capitulation lows happen, you typically get really big bounces. The way that this one's a little different. Remember, capitulation is where everyone jumps out. They say, I can't handle it anymore. It's too intense, or they get pushed out by the margin departments at their brokerages to where they're forced selling. This all happened Sunday night. So there were definitely, futures traders, currency traders that were absolutely blown out of positions. But by the time the stock market opened up in the morning, it wasn't a catastrophe. So that's why I'm calling this a capitulation bottom, but that's one thing that's different, is that we didn't get the equity markets forcibly liquidated. So if you are looking at a reason to say, Rob, I don't agree with you that it's a capitulation bottom, I will agree with you 100% on that reasoning, because I have that reasoning as well. But we had the VIX spike so high. Whenever you see those VIX just spike up, it's telling you you're at least close. So look, we have to keep assuming that until we're above the 50-day moving average, the rallies are going to be sold. Even if we believe otherwise, which I do, I actually think we are going to have a pretty decent bounce off this low. But I no longer trade my opinion. It's the thing I'm the most proud of as a trader. I no longer trade my opinion. I trade the charts. And right now the charts are telling me we're below the 50. We just made a low. Expect these rallies to fade. And that's how I'm going to trade. I don't trade my opinion. I trade my charts. I trade my scoring systems, and I trade my slots. That's it. Look at the sectors. Sectors are going to tell you everything. Make sure you're in the right sectors with the right allocations. And other than that, let's have another great week. We've got monthly options wrapping up this month. So we'll do all the accounting on Monday, payouts on Tuesday, and level advancements next Wednesday. Everyone have a great weekend. Goodbye, everybody.